Hi guys, welcome to new session for Business Studies Quick Revision for Class 12. In today's session, we are going to revise chapter number 10 on the financial markets. So let us start. Now, all business in our country, they operate in economic system. And this economic system is made up of two sectors. The first sector are those people who save the fund or those who supply the fund. They are also known as the household. The second sector, they are called the business stocks, called the investors and the demand generators of the fund. Now, the financial market helps to link the fund from the savers to investors by mobilizing the fund between them. Now, by doing it, financial market perform the allocative function, which means allocating or directing available fund for investment into most productive investment opportunities. Now, there are two major alternative mechanisms through which funds allocation can be done. These are banks or financial markets. Now, a household can deposit his surplus with the bank, who in turn could lend this money to the business firm, or the household can directly invest this money with the business firm and they can buy the securities through the financial market. Now, from this, it can be said that the banks and the financial market, they are competing intermediaries and provide investment option to the savers, that is the household. The process by which allocation of fund is done is known as financial intermediation. The financial market is an acting as a financial mediator. Financial market includes a whole network of organization and institution that provide short-term, medium-term, and long-term funds. A financial market is a market for creation and exchange of financial assets. Hence, in a given financial market, there are two types of financial transaction. This could be either creating financial asset or exchanging financial asset. Creating financial asset means basically means issuing shares and debentures at initial level, and exchanging financial asset means making sale and purchase of shares and debentures possible. Now, what are the functions of this financial market? First of all, as we said, it helps in mobilization of savings and channelizing them into the most productive use. A financial market facilitates the transfer of funds from the savers to the investor, from household to the businesses. It gives various choice of investment to the household so that the surplus fund can be invested in the most productive source. Second function is facilitate price discovery of financial assets. Now, forces of demand and supply will decide the price of the product. Financial market provide platform to suppliers, that is the household, and demand generators, that is the business firm. The interaction between them facilitate the price discovery of financial asset. Then the third function is it provide liquidity to financial assets. Financial market provide ease of sale and purchase of financial asset. It means asset can be converted into money and vice versa. That means financial market provide great amount of liquidity for financial asset. And finally, it reduces the cost of transaction. The financial market provide valuable information about the securities being traded in the market. It reduces time, effort, and money of the buyer and the seller for finding each other. Therefore, it reduces the cost of transaction. Now, in the financial market, you first have the money market. Now, it is the market for short-term funds, which deals with the monetary asset whose period of maturity is up to 1 year, that is 12 months. Money market does not have any physical location. It is an activity conducted over a telephone or a internet. Such activity is conducted to raise large amount of funds from short term and thereby meeting temporary shortage of cash. RBI, commercial bank, non-banking financial institute, which are also referred to as NBFCs, mutual funds, large corporate houses, they are the major player of the money market. Money market transaction instruments are highly liquid because they are short term, so they are highly liquid. Means these instruments of money markets are close substitute of cash and are highly liquid. This is because Discount Finance House of India provide ready-made market for them. They are less risky. Instrument of money market are unsecured, still they are less risky. This is because the shorter duration of investment and financial soundness of the issuers. Then you have capital market. Now, capital market refers to institutional arrangement through which long-term funds can be raised. It is a channel through which savings of household is made available for business firms. Major players are individuals, development banks, commercial banks, and stock exchange. An ideal capital market is one where finance is available at a reasonable cost. It is always required that capital market should be well developed and market operation must be free, fair, competitive, and transparent. Now, capital market can be further divided into primary and the secondary market. So, what is primary market? It is called a new issue market. It deals with new securities being issued for the first time. So, all the IPOs which you see, all the money which you invest in the IPOs, initial public offer, this means you are trading in the primary market. This market facilitates transfer of funds from saver to the investors. Company can raise funds in primary market through equity shares, preference shares, debentures, loans, deposits. Such funds will be now used by the companies for new project, expansion or diversification. Primary market does not have any physical location. Then you have the secondary market or the stock exchange. They provide liquidity. The stock exchange is a platform where buying and selling of existing that is, securities which have previously purchased. A market, this secondary market, it facilitates the exchange of securities, be it equity share, preference share, or debenture, into money and vice versa. It helps existing investors to disinvest and new investors to enter the market. It provides liquidity and marketability of existing securities. Secondary market contributes to economic growth by channelizing funds into the most productive investment through disinvestment or reinvestment. Now, let's look at the functions of the security market. We have already discussed most of them. So let us cover them one by one in details. First of all, you have providing liquidity and marketability of existing securities. The main and the basic function of stock exchange is to create continuous market where securities are bought and sold. By doing this, it gives investors the chance to reinvest or disinvest. This provides both liquidity and marketability to the existing shareholders or the existing securities. Then pricing of securities. The share price of stock exchange is determined by the forces of demand and supply. Stock exchange acts as a mechanism for constant valuation of shares, which helps in deciding the price of the security. Such instant information is always helpful for the buyer and the seller. Then it also provides safety of transaction. The membership of stock exchange is well regulated and works according to existing legal framework. Stock market ensure that investing public, that is the shareholders, they get safe and fair deal in the market. It contributes to economic growth. In stock market, existing securities are resold or traded. It creates the platform of reinvestment and disinvestment. Now, through this process of reinvestment and disinvestment, savings are channelized into most productive investment avenues. This leads to capital formation and hence economic growth. Then it helps in spreading of equity education or equity content. Now, stock exchange also plays vital role for educating the people who are trading on the stock market. It continuously provides knowledge on new issues and better trading practices. Such steps always enhance investors' trust towards the equity investment. And finally, providing scope for speculation. Now, speculation refers to forecasting about whether the price of a commodity will be increasing or decreasing in the near future. Stock market provides sufficient scope for speculation in restricted market and within the provision of law. It is generally expected that certain degree of healthy speculation is necessary for liquidity and price continuity in the market. Now, let us look at what are the steps in trading and settlement procedure. Now, first of all, if an investor wishes to buy or sell any securities, he must approach a registered broker and enter in agreement with him. He has to sign a broker-client agreement and the client registration form. He also needs to provide certain other details, for example, your PAN number, date of birth, education qualification, your residential status, your bank account details, which you normally see. Now broker opens an account in the name of the investor. Then the investor has to open a demat account. Now, what is dematerialization? What is demat? We'll cover in a while. Now, the investor has to open a demat account or a beneficial ownership account for buying and selling the shares in the electronic form. The investor then places orders of broker to buy and sell the shares. Clear instruction should be given about number and price of the share for buying and selling. Now, the broker will go ahead with the deal at the above mentioned prices, and order confirmation slip is also issued by the broker to the investor so that investor can also have a record of the transaction. Now, broker will go online and connect to stock exchange to match the best price of the share. When the shares can be bought or sold at the price mentioned, it will be communicated to the broker's terminal and the order will be executed electronically. The broker will issue a trade confirmation slip to the investor. Any trade has been executed within 24 hours, the broker issues a contract note. This note contains details about the number of shares bought or sold, price, date, time, brokerage charges, and a unique order code number is assigned to each transaction by the stock exchange and printed on every contract note. Now, the investor has to deliver the shares sold or pay cash for the above share bought. This is called pay-in day. Now, this pay-in day takes place before T plus 2 days, as deal has to be settled and finalized on T plus 2 days. That is, settlement cycle on stock exchange is of a trade plus 2 days with effect from 1st April 2023. Now, there are news that this time period will be reduced to T plus 1 day. On T plus 2 day, exchange will deliver the share or market payment to the broker. This is called payout day. The broker has to make payment of the investors within 24 hours of the payout day, as he has already received payment from the exchange. The broker can make delivery of shares from his demat account to investor's demat account. Investors are required to give demat account details to the broker. Let us see what kind of the depository function which is performed by the exchange. Earlier, the settlement system of Indian Stock Exchange was very inefficient, as securities were traded in the form of physical shares. Now, this led to a problem in settlement delay, theft, forgery, To wipe out this problem, the Depository Act of 96 was passed. It was formed with the purpose of transferring securities with speed, accuracy, and security. Now, depository like NSDL and CSDL, that is the Central Depository Service India Limited and the National Security Repository Limited, these organizations, they helps to hold securities like shares, debentures of investors in electronic form at the request of the investor through a registered depository participant, which we call as a broker or a bank. Now, let us understand what is the dematerialization or the demat account. Now, all trading in securities is now done through a computer terminal. This is mainly done to eliminate problems like theft, fake or forced transfers, transfer delays, and paperwork associated with the share certificate. This is the process where securities held by the investor in a physical form are cancelled, and the investor is given an electronic entry or a number so that they can hold it in an electronic balance in an account. This process of holding securities in an electronic form is called dematerialization. For this, the investor has to open a demat account with an organization called a depository. In fact, now all the IPOs are issued in dematerialization form, and more than 99% of the turnover is settled in the demat form. Holding shares in demat form is very convenient as it is just like a bank account. Physical shares can be converted into electronic form, or electronic holdings can be reconverted into physical certificate, which is referred to as rematerialization or remat. These demat securities can be pledged or hypothecated to get loan also. Now, let us see the regulator of this financial market, which is the Security Exchange Board of India or SEBI. Now, SEBI was established on 12th of April 1988 by the Government of India as an administrative body. It ensures orderly growth of stock market and protect the right and interest of the investors. The overall function is under the Ministry of Finance. Let's look at the objective of the SEBI. The objective of SEBI includes regulating stock exchange and security industry for promoting their orderly functioning, protecting rights and interests of investors, particularly individual investors, and the guide and educate them to prevent the trading-based malpractices and self-regulating of security, to regulate and develop code of conduct for intermediaries like brokers and merchants with the view to make them competitive and professional. Now, what are the functions of SEBI? First of all, you have the regulatory function, the registration of broker and sub-broker, registration of investment schemes like mutual funds, ETFs, regulations of merchant bankers and portfolio exchange, minimizing or regulating the takeover bid, calling for information, doing inspection like auditing of stock exchange or the any intermediaries in between, charging fees for their duty, and performing power as well as Securities Act of 1956. Then we have the development function, regularly doing training of intermediaries, conducting research and publishing information useful for the participant, undertaking flexible measures to develop the capital market. And finally, you have the protective function, that is a watchdog function, prohibition of unfair practices, controlling insider trading, undertaking steps for investors protection, and promoting fair practices by developing code of conduct. With this, we have finished the revision of chapter number 10. I hope you like this video. If you did, please like, share, subscribe to my channel. Thank you so much for watching.